Hello everyone. I'm very happy to finally do this webinar that we've been planning for ages with JurisTax, my friends at JurisTax. My name is Mohab Saeed. I'm the Managing Director of Manifesto Consultancy, and I work with JurisTax closely for about almost 2 years now in helping Egyptian businesses and Egyptian startups. I'm the lead contact in Egypt in helping Egyptian business and Egyptian startups to start their offshore businesses and starting their companies abroad. So let me at first make a quick introduction of the panelists and speakers we have with us today, and walk you through what we're going to discuss. And then I'm going to leave the floor to the speakers, and at the end of the webinar, we're going to leave the floor for your questions, and we'll be very happy to have this as a very fruitful and helpful. We hope this will be a helpful and fruitful webinar for everyone. So let me start by introducing our, we have Ibrahim Shehata, a partner at Startright law firm, which is a law firm specialized to do business to help startups with their legal matters, as well as he's a partner at Shehata and Partner law firms. He will discuss with us, and he will help us to understand the Egyptian ecosystem, the legal ecosystem mainly, and the legal framework when it comes to startups, and why startups usually have this need to go offshore in order to raise capital, maybe in order to other questions. And for that, we will be having as well Nagaty, a very well-known Egyptian entrepreneur and angel investor, to give us the insights of the business sector side regarding how does investors think, what does investors ask for, what's needed really for entrepreneurs to and why Egyptian businesses and Egyptian entrepreneurs to go for startups, to go for offshore holding companies. Sorry, and definitely we have Taroonah, who's from JurisTax. I left you for the last because you're. I'm a bit biased to JurisTax, so I'm technically I think of myself as part of the team as well. So Taroonah from JurisTax, who will be explaining to us a very important aspect that we'll be discussing today in this webinar regarding why UAE, because as well here in Egypt there was a bit of a trend when some of the startups got their got their investment cycles. A lot of people were asking why some startups go offshore, and especially in the UAE. So Taroonah will give us the insights as an expert in this subject matter on why UAE and why do businesses go to UAE. So let me share my slides, and just I will leave the floor with Ibrahim at first to just to lay out the ground on the Egyptian market, and to lay out the ground on the Egyptian ecosystem, legal ecosystem. So Ibrahim, the floor is yours.
Hi everyone, thank you Mohab for the kind introduction. It's a pleasure to be here with all of you, with JurisTax and with Nagaty. I think it's very good and it's very fruitful to have like all point of views from all angles, from the angle of like the law firm and the tax advisory in the offshoring jurisdictions, from the lawyer in Egypt, and from the business side as well. So let's go to why any like startup would love or would like think about going offshoring at the first place. So I can say that there are two things that are usually justify this issue. And when we are talking about a holding company, we are talking about a company that doesn't operate. So if you're going, for example, to the UAE as an expansion strategy, that you're going to offer your products to UAE residents, that's different. But we are talking from my perspective about like, having a holding company that doesn't operate, either it's in the UAE or in other offshore jurisdictions. So for me, it's all about two things. These are the two most important things. It's the capital gains tax and having minimal tax exposure at that level. And we are talking about capital gains tax. It means the tax that applied to like, investors coming in and going out or exiting the startup, and how much like of their profit is taxed at that level of transactions. So that's the first thing. Many offshore jurisdictions offer like, zero or almost zero. Can we go back, to the last slide? Zero or almost zero tax on that type of transaction. And the second thing is the legal certainty. So for Egypt, this is not the case. I will talk about the taxes in a different slide, but let's talk about the incentives for startups in Egypt. Egypt has a lot of qualities that make it a very optimal jurisdiction for startups to operate, but maybe not the best jurisdiction to have a holding company in it. So for example, when the new SMEs or MSMEs law has been drafted, it offered a discounted tax rate, but it said that this discounted tax rate will be applied to the revenues and not the profits. This doesn't take into consideration that most startups are not really into it for profits for the first 4 or 5 years. They actually like trying to get more market share, and they are trying to they're not trying to have profits. They're maybe more concerned about the revenues than their profits at the beginning. So it doesn't make sense for most startups to go with that structure or to apply for that like incentive. The other thing which is important, that there are many government or governmental backed institutions that offer grants that can be through like DFIs, development banking institutions, or through like governmental institutions themselves. So that's very important, because that's something that it's for zero equity, so there is no dilution to the founders. One of the updates that we have to talk about, and that's something that makes Egypt a very optimal jurisdiction for fintech startups specifically, is that the new law that has been issued like this earlier this month about the non-banking fintech activities. FRA, which is a financial regulatory authority in Egypt, has issued the law, or has been the regulator under the law, and it said that they will have their own sandbox to offer startups to come and test their product, and they will have also a specific startup license that will be for the period of 2 years, which is a good period to make sure that you have enough resources or enough information to be aligned with the market in Egypt. And it said that there will be. It didn't say that specifically, but it at least said that there will not be any licensing fees for the startups on that issue. So that's around 50,000 Egyptian pound, which is around $4,000. And it said also that the minimum capital will be 250,000 Egyptian pound, but it didn't say whether it will be paid in full and advance or not. But the talk is that there will be a lot of like minimized or like sort of facilitated conditions for startups in that sector. This is something that we have to say about definitely. Then we can go to the next slide and see to talk more about the real challenges that face startups in Egypt. And there are several issues here. I'm not going to talk about each and every one of them, but let's talk about the overarching issue here, and that's enforceability. Enforceability is an issue in Egypt for different reasons. Your rights can be enforced, but the problem is not whether, the problem is when. So when is critical for any startup, because startups, they don't have a long period of time. They can find themselves bankrupt after 4 or 5 years if they don't get their receivables, for example. So that's the issue here. So it starts from the last, or the one before last. The dispute resolution mechanism is not very fast. I think if if the Egyptian government wants to do something about that, it might, you know, explore more innovative alternative dispute resolution mechanisms and have them enforced quickly, so that can help startups. Other things that you know that are still not very clear is the ESOP, the Employee Stock Ownership Plan. It's only available for joint stock companies, and actually, I didn't hear of any startup doing it in Egypt. Most of them do it at the holding level because it's very, very you know, difficult to do in Egypt, procedural wise. Also, the classes of shares, we have a class of share for preferred shares, but you can only have voting rights as a preferred like right, or only dividends rights. For startups, you know, dividends are not important at first, but still, it's, you know, there's no flexibility of having several options in the preferred shares. It's either this or this. So that's an issue. Also, another issue is the convertible loan instruments. They are enforceable as per the law, but we don't have, like, you know, we're a civil law country, so we don't have like a specific law on that. It's just something that, you know, falls under the general principles of law, that, you know, that's something that is enforceable. And lastly is the share buyback provisions. This is actually very critical because there are some, you know, some judgments about that, about this sort of mechanism and whether it is 100% legal or not. It's similar to repos or repurchase options, or like, you know, put options. And there has been several judgments that have been like, you know, let's say taking the cautious approach on that front. Lastly, I don't want to take a lot of time to leave the floor for everybody. So the next slide, I'll talk very briefly. If we can go to the next slide, Mohab. Yeah, the one before that, yes. So tax considerations. So there's corporate income tax that's high. That's around 22.5% for companies in Egypt. Capital gains tax, there has been some amendments in that. So it was per transaction, a fixed percentage per transaction, but now it is different. The mechanism is completely different. So they include it within your tax base. So for example, if you have 4 transactions per year, you got some money in 2 of them, and, you know, you lost on others, then these losses offset the wins, and you pay the tax on the whole, you know, tax return, including, you know, your profits and expenses from other streams as well. So the structure is a bit different, but it is included within the 25% for individuals tax rate and the 22.5% corporate tax rate. So it is still has a high tax exposure. Taxes on dividends and interest and royalties. I don't think that this is something that, you know, startups should worry about at first, but it's something that you should worry about down the line. So the tax rate, I'm not a tax lawyer, but the tax rate is not is like around 10%, give or take, like, you know, depending on the tranches and so forth. But it's still you have to explore. This is something that one of the things that you have to explore is whether the country you're offshoring to has a double taxation treaty with Egypt or not, because then this it makes more sense to go to a jurisdiction like the UAE or the Netherlands, where they have such a double taxation treaty. Other considerations: foreign exchange control has been better since the floating of the currency, so there hasn't been much you know, excessive regulations or much excessive controls on that regard. Administrative process, actually, to be honest, like GAFI, the General Authority for Investment, has been much better than before. So we can say that there has been some improvement in that regard. We just need to have a better, like, you know, a better like propositions for other areas, like for the capital gains tax and for the enforcement of rights, as we mentioned in the previous slide. So that's it for me. I'm happy to, you know, leave the floor to my friends at JurisTax.
Thank you, Ibrahim. I guess maybe to sum what you've been saying is it's mainly the issues that startups or businesses in Egypt face is what you said when you said the problem is not whether this thing is going to be applied. It's about when it would be applied. So we have, for instance, we have some very well stipulated regulations in the Egyptian ecosystem, but still the process when it comes to courts and the process when it comes to the bureaucratic procedures takes a lot of time, as well when it comes to the other matters that have not been encountered by the Egyptian regulations regarding mainly the matters regarding the shareholders agreement and the different options that investors and entrepreneurs would need in order for their business to work well. So there is some advancement going on the legal ecosystem in Egypt, but still we're still waiting for these changes and these new laws to be applied in a better way, in a manner of speaking. If I may, if you have any comments on what I said or how I tried to summarize your points, Ibrahim.
No.
All right, perfect. So now I should be going to the other side, to the other side of the planet, to Taroonah, Mauritius, to tell us at JurisTax headquarters, to tell us more about UAE and to tell us more about offshore and the offshore structuring that we usually do. I moved to just before we go to Taroonah as well, and I want her as well to confirm with me on that, because we've been doing some business with JurisTax here from Egypt, and some startups in Egypt, they like to structure their holding companies. Usually I know that there's around the world, there's something around 50-something offshore destinations. Mainly the most used offshore jurisdictions that we see working in this market is mainly UAE. Comes in UAE and Mauritius are very preferred to our clients here. Singapore, Delaware, and Netherlands as well. So these are the most preferred destinations out of 50-something destination of financial offshore destinations. And moving to Taroonah, speaking about UAE. So why UAE? That's mainly the question for you.
Thank you, Mohab. Hello, everyone. Thank you for joining us today. So as Ibrahim has well explained the challenges being faced today by Egyptian businesses, I'm going to talk about why you may consider the possibility of structuring through the United Arab Emirates. So the UAE. The UAE is a country with 7 emirates and 40 free zones operating. Who has not heard about the Dubai airport? Situated in the center of the world, the United Arab Emirates is strategically located and has one of the most internationally connected airports. It's a country which offers a lot of things, and I'll ask Mohab just to move to the next slide. It's a country which offers political stability. It's a country which offers a high quality of life, low crime rate, low tax rate, highly qualified labor, coupled with modern infrastructure and connectivity. So these are the different attributes of United Arab Emirates for anyone who wants to reside there or do business in the United Arab Emirates. If you move on to the next slide, you will see that here are the tables about the most important things to consider whenever you're deciding to set up a structure. You will see that United Arab Emirates has positioned itself as a strong international financial center, just like what Mohab has previously said. And this for various reasons. First of all, because of its regulatory framework, its ease of doing business, its network of non-double tax treaties and investment and promotion protection agreements. It is a country which has built up a solid reputation by making use of best practices and adopting strong legal and regulatory framework to comply with international demands requiring greater transparency. You will see in terms of compliance with the international norms, it is there. As for the tax regime of United Arab Emirates, the percentage rates and figures speak volume about it. There is no corporate tax, no income tax, no taxes on capital gains, no taxes on payment of dividend, interest, or royalties. On the next slide, you will see in terms of ease of doing business as well. May I just suggest you to move to the next slide? So in terms of ease of doing business, it's got one of the most easiest and flexible way of setting up entities and managing those entities. And it all starts with the possibility of owning 100% shareholding in an UAE entity. It is possible as well to have only foreign directors on that entity. You do not need to be physically present to set up a UAE entity, though it's a different thing when it comes to bank account in UAE. You need to be present there to have it open. You can get a residency visa depending on the type of entity that you decide to set up in the United Arab Emirates as well. Moving on to the next slide. You will see that the United Arab Emirates offer different types of corporate structure. It is important to differentiate between the three main types of corporate vehicles here. There's the first one, which is the mainland and commonly also known as onshore companies. Then you've got free zone companies. And last but not least, you've got offshore companies. The decision as to what type of corporate structure best suits your needs depend on the various considerations, such as how many business partners will be involved, whether you're going to do business within the United Arab Emirates or outside the UAE, how many visas you require, be it investor permits or employee permits, where do you want your office to be, where do you want to trade. So all these will be matters to be considered when deciding whether you need to set up a mainland company, an offshore company, or a free zone company. Starting with mainland, what is a mainland company? It's an onshore company which is licensed by the Department of Economic Development, which does not have any restriction when it comes to where you wish to operate, whether it's local market or outside the United Arab Emirates. On the next slide, you will see that in addition to mainland companies, there is another very popular type of company. There's other free zone companies. You've got about 40 free zones operating in the United Arab Emirates, and it keeps on growing in terms of the new free zones being set up. Each free zone has got its own specificities, and I would say is specialized in one type of operating businesses. You will see here a list of all the most popular free zones being present currently in the United Arab Emirates. There is a Dubai Multi-Commodity Center, which is very popular for all those trading in commodities such as tea or coffee. You've got the Dubai International Financial Center, a renowned financial services center where you will see international names of fund managers, financial advisors being present there as well. If you move on to the next slide, you will see also the last category, which we are discussing, are the offshore companies. These are companies being set up by anyone who has no intention to do business within the United Arab Emirates. Offshore companies, there are two main jurisdictions within the UAE that offers them. There is Ras Al Khaimah and the Jebel Ali. Both has got its own benefits and lesser, I would say, disadvantages. Ras Al Khaimah is cheaper in terms of the maintenance and setup costs as opposed to JAFSA. However, JAFSA is commonly used for anyone who wants to own real estate within Dubai. Both are tax-free jurisdictions that allow for 100% being owned by foreign shareholders. You will see in the next slide that we have made a comparison between, in the next slide, you will see the comparison table between the mainland, free zone, and offshore companies. So be it mainland, free zone, or offshore, the corporate tax rate today is 0%. Having said this, it is important to note that as from the year 2023, mainland companies will be subject to a corporate tax rate of 9% in the United Arab Emirates. So we are expecting more clarity and more precision on this, but this is going to happen as from year 2023. Be it mainland, free zone, or offshore, all allow you to be 100% shareholders in those structure. In certain types of entity of mainland onshore companies, you may be required by law to have a local sponsor who is an Emirati, but it depends on the business activity you wish to undertake. The mainland and the free zone companies have access to tax treaties, network of tax treaties of the UAE, and we're talking here about 92 of them. Similarly, in terms of visa application, if you're setting up a mainland or a free zone company, you will be entitled as investors to have residency permits within the UAE, or you may also apply for those permits for any employees you wish to have. There is a new thing which just kicked in the United Arab Emirates is the economic substance regulations since 2019. Today, be it the mainland, free zone or offshore company, irrespective of a category, if you fall within what they call the relevant activities, which is listed on the slide here, you will be required to satisfy a certain number of economic substance requirements. And what are those? Mainly, you will be called upon to hold your board meetings in the UAE, have an office in the UAE, and have the employees in the UAE. All these would be taken into consideration as to justify your substance within the UAE. So on the next slide, you will see that here is an illustration of why you may consider having a holding company in the United Arab Emirates. You will recall the difficulties being faced by an investor who wants to invest directly in an Egyptian business. Now, an alternative would be to set up a holding company to hold your investment from the UAE in Egypt, in the Egyptian venture. And this mechanism would via its memorandum and articles of association, allow for creation of different classes of share, special provisions in relation to buyback and distribution, payment of the dividends, but also the protection and enforceability of shareholders' rights, which Ibrahim has explained during his part of presentation. This provides, in the memorandum and articles of association, all these written provisions will provide a guarantee to be it shareholders, investors, or employee as to the protection and enforceability of their own rights. The holding company in the United Arab Emirates will be tax exempt. There is no taxes on corporate profits, on dividends, or payment of royalties. But also, in the event you would wish tomorrow to sell the Egyptian venture, by selling the shares in your holding company, there will be no capital gains tax. Further, United Arab Emirates do not have any foreign exchange control, which means that you can undertake payments and receive funds in hard currencies freely. In the next slide, you will see that we've taken an example of someone who wishes to do business in Egypt but with a holding company in the UAE. Now you can decide whether it's mainland, free zone, or offshore company that will hold your investment in Egypt. All will depend as to whether or not you wish to take advantage of a non-double tax treaty between the UAE and Egypt. We always advise clients to take advantage of the non-double tax treaty, which will, as you will see here, effectively reduce the withholding tax on payments of dividends. So this is, we can safely conclude that having a structure in the UAE is interesting to take advantage of, first of all, the regulatory framework, but also the low tax environment. The holding company will provide an optimum structure and also an efficient exit mechanism for investors. All these are possible via the holding company being set up in the United Arab Emirates. I believe these were my slides here, and I'll be happy to take any questions you may have at the end of the presentation. So back to you, Mohab. Yeah, I think you're on mute.
Okay. So I just have a couple of comments myself, because I see that the mainland companies now are becoming very competitive. I guess there is some improvements in the regulations, because regarding, for instance, the 100% foreign ownership that wasn't the case in the past, in the very near past, a lot of other things. So they are doing a lot of improvements in the mainland companies as well to be very competitive to the offshore companies. So now the decision is a bit. I see how it's becoming now a bit competitive, because as well for everyone, Dubai and UAE is somehow trendy, and some people just open companies over there because it's United Arab Emirates man and the marketing behind the country. I see as well the things regarding the banking account you discussed, and you discussed that when it comes to foreign exchange, there is no limits, I believe. But I know as well that there are a bit. It's not that easy process when it comes to UAE. So there is a bit of more regulations, like regarding other destinations. For offshore, you don't need to travel to open the bank account over there, but UAE, you have to go there. So if you can as well just elaborate a very bit about the part regarding the banking account and opening the bank in UAE, and why opening a bank in UAE, because I know that sometimes we suggest that you can open the company in UAE, but the bank account we open it, for instance, in Mauritius.
Yes.
And I know as well that we're going to move to Nagaty, and we discussed this as well with him before. So I know that he would have a very interesting insights as well on that. So if you might just elaborate a bit about the bank in UAE.
Indeed. Sure, Mohab. So first of all, just to comment on what you've said, indeed, the mainland companies changing the regulations does prove to be more advantageous for many who previously would not set up mainland companies because of that legal requirement for having a local sponsor. So sure, they are trying their best to make to be more accessible to more audience. Having said this, the banking system in itself worldwide has changed drastically throughout the last few years. And this has happened because of the increase in compliance burden currently being imposed on financial institutions by international organizations. So today, every banking institution has got its own, I would say, requirements to ensure that they are doing the KYC, the client's KYC as well. So they are very prudent. And the United Arab Emirates, the banks there, they would be more inclined to open bank accounts for free zone or mainland and onshore companies where they know and they can verify the subsidy requirements, but it will be more complex for simple offshore companies which are not doing any business in United Arab Emirates to have bank accounts open in the UAE. Having said this, we have open bank accounts for offshore companies as well in the UAE, depending on the business activity the client wants to undertake, the type of amount of funds that he wants to invest into that company, the level of substance requirements he wants to undertake on that UAE offshore company. And but it's very important, and there is one criteria that the banks will look at when deciding whether or not they will grant the bank account opening is whether the shareholder wishes to take an investor permit, how much money they are going to put through or transact through that UAE bank account. So all these are criteria. There is nothing as I would say, a checklist that is, if you tick all the boxes, so you are going to have your bank account there for sure. So it really depends on the bank. It really depends on the UBOs and the entity that's going to have a bank account. But like you've said, certain clients don't want to make don't want to go there physically and have a bank account open, especially with COVID and everything. So we do have alternate banking solution for them, just like Mauritius, where you don't need to be present to have a bank account open. So all those are options.
Okay, so there is always a solution for this. Let's call it issues, a bit of an issue if people want to travel, or because of the regulations over there as well. It's a bit very heavily regulated as well when it comes to banking over there. So now I'm going to move to Nagaty, and before moving to Nagaty as well, I would encourage the participants to start sending us questions if they have questions, to start because I know that there's a lot of questions regarding the UAE and regarding offshore structuring and I see in the attendees most of the names sound Egyptian to me, but we have as well some foreigners, so we will have to do. I know that Nagaty is a very well-known figure in Egypt, my friend Nagaty, but we will have to start with just a very quick introduction about who's Nagaty as well for the people who don't know. Nagaty, you can hear me?
Yes, thank you, Mohab, for the intro. My name is
If you may
Mohamed
make
Nagaty.
just a very quick introduction about your work, what you do. And,
Okay. Mohamed Nagaty. I'm a computer engineer. I worked in the startup scene in Egypt since 2006. I was an early employee at Fawry. I was the region director of Careem. I'm a co-founder at Halan. I am a co-founder with Klivvr. It was a venture building project. I sit on the board of several funds and several startups, and looking forward to this conversation.
Perfect. Okay, so let me start with a very basic and question that might start your insights about offshore structuring and your experience with offshore and like that. So what are usually, out of your experience and your different hats, because I see it's a very long CV and very different hats you're wearing, but what are mainly the ingredients that investors look for in order for startups from the perspective you're discussing the offshore and holding companies? What are the main ingredients that investors look at and as well from the other hat entrepreneurs look at to start?
Okay, so let me start with the founder or entrepreneur side. We look at the vesting. We look at the legislation that allows ESOP. And can everyone just mute, because I'm listening to myself again? So can you just yeah, ESOP and vesting and how you can guarantee the rights for the team, because what makes people join startups other than corporates is the ESOP and the vesting and having shares and equity. So the legislation has to allow this and has to guarantee the rights of the team. This is extremely important on this side. The other side for the investors is when I as an angel investor, I have to make sure that I will be able to sell my shares whenever I want to sell in the best format for them to be sold. Also, the taxation. I don't want to pay a lot of taxes or double taxation. I want to pay taxes because it's part of my role to pay taxes, but not to pay more than what I should or to double pay the taxes. And the last part is that to be a clean place that doesn't have any money laundry or any issues with legal issues that can come back at the company. So those are the three things that we usually look at.
If I may ask you or ask Ibrahim as well to just elaborate about some terms, because some people with us might not be very familiar with the terms of vesting shares, and the terms of ESOP, which is the stocks of the employees. Can you just elaborate on that?
You want me to elaborate, or Ibrahim? Okay, so let me explain it. ESOP investing. ESOP is the shares that you receive by working for the company. Like, for example, you get 1% over 4 years or 10% over 4 years. The first year is usually a cliff year where you get maybe 25 to 30% of what you should get, and then you vest monthly, or you get the rest of the shares monthly in return of KPIs and things you are doing for the company. And there is 2 types of ESOP, at least the companies I worked with. One of them is a strike price ESOP, where there is a certain value that you receive the ESOP at. For example, it's for $10. So whatever the ESOP, the share price increases from the $10, you get this in return. And the other part is similar to shares or phantom shares, where you just get the share at 0 cost, and then you get the full price whenever there is a sale, or there is a round, or there is a way of selling it.
Vesting part as well, Nagaty, if you may explain it simply.
The vesting is taking shares over a certain period of time for doing a certain role for the startup. And it's usually, as I said, you have a cliff. For example, in 1 year, for example, if you're vesting 100 shares over 4 years, usually you get 25 shares of those in the first year, and then every month you get 1/36 from whatever is remaining as long as you're working. And whenever you leave, you walk away with the shares you already worked with, and you leave away the shares that you didn't work with for someone else to take.
Okay, perfect. So basically, what you said is that the main things that concerns entrepreneurs is the vesting in ESOP part, and the main thing that concerns the investors is the taxes is part of it, and the double taxation. And definitely, you said the disclaimer that investors still want to pay taxes, but they really concerned as well about the double taxation part, and the other part regarding the clean place, or if I may paraphrase it to say the reputation of the destination that you're going to open this company at, because there's a lot of we see in the media and the general review mainly of offshore is that there's a lot of places that's used for money laundering and other stuff. This as well is a very main concern to the investors. If I may move more to details about your own personal experience in setting up offshore companies, and then I'm going to move to some questions I'm receiving now on the chat mainly, and you can as well send the questions to the Q&A. So the challenges, like your own experience setting up your very first offshore company, and what were the challenges? I believe you weren't very well educated regarding in the very beginning. It was a very nascent process for you. You weren't very knowledgeable about the offshore companies like as you are now. And what were the challenges you faced in your very first offshore company?
Let me be honest, I always try to set up companies in Egypt first, and I prefer having and investing in Egyptian companies. We usually go for offshore companies when there is international investors who ask for offshore companies. So me myself, I like to invest in Egyptian companies, and I actually prefer Egyptian companies or locally based companies in whatever market it is.
And how do you handle the issues that you just mentioned regarding the vesting, the ESOP, and all these things regarding mainly shareholders agreement?
This is the problem then. When the company goes big and it needs those stuff, and it's doing rounds and the team is going bigger and it's hiring big names or bigger talent to join, and we need this, we usually go to offshore companies. I tried a lot to work with certain entities in Egypt to create free zones in Egypt and to help with this, but sadly they were all failed attempts. So what my first company that I had an offshore experience was in the US, and it was very expensive. My second one was in Netherlands, and it was also very expensive. My third one, I'm actually doing it now. It's in ADGM, it's in Abu Dhabi, and I hope it's not as expensive as the other two. Okay, so okay. And about the challenges, about like, have you faced some issues regarding the shareholders agreement and implementing the shareholders agreement, regarding the bank accounts and the bank account is always a problem. Like all the lawyers go in a hurry and open the company and take their fees, and then when you say I want to open a bank account, they all stay silent and they tell you find a way to open the bank account. So yes. We managed to open a bank account in the US company. We managed to open an account in the Netherlands company. In the ADGM, I will still take the experience, but it's usually hard. It's usually hard. If I may add regarding this bank account issue, like I have like a long list of people who actually are referred to us because they opened this companies in different destinations without naming the different destinations, and some destinations. Regarding the very important point that you spoke, that a clean place or the reputation of the destination of the offshore, it's very cheap and very easy, and you do it by 1, 2, 3 click online, and you have the company, but you're not able to have the bank account, and then they face a very big issue regarding actually getting the investment injection that they have the deal to get. So
like I have to be very frank, I have a very long list of people are requesting opening bank accounts for offshore companies that they did in different destinations, and it's a huge issue, and I guess we will need to discuss that as well with Taroonah and Ibrahim. So regarding your final.
I have a question for Nagaty.
Yes, please.
I'm saying like, how would you define expensive? Like, what is the range that you would say, okay, that's fine, and what is the range that's expensive? And when you say expensive, you're talking about the first phase incorporation, or you're talking about the recurring fees? Because I understand in Delaware the incorporation is very cheap, but the recurring fees is very expensive. And so I just wanted to elaborate on that for the listeners, because it's your experiences.
Expensive is relative, Ibrahim. Like if you're a $100 million company, $100,000 is not an issue. If you're a $100,000 company, $10,000 is an issue. So expensive, I mean, compared to the size. Usually when you're doing this offshore exercise, you're doing it for a small company, a startup that's starting. So expensive is relative to the cap of money you have, or the cap table wealth, or how much money is coming into the round. So expensive, I mean the setting up the company and the running cost. And as you said, yeah, Delaware is a bit cheaper in setting it up, but the running cost is high. Netherlands is a bit the opposite. ADGM, we're still exploring. I didn't do Mauritius, I didn't do BVI, I didn't do all of those because I was afraid of the reputation. But the ones I tried, they were expensive for the stage that the startup was at during this phase.
Okay, so let me take this and move to Taroonah regarding the bank account. So regarding opening the bank accounts and the issues that Nagaty was speaking about regarding opening bank accounts for startups, can you walk us through the process of opening bank accounts, the advices that we give to regarding opening bank accounts? I guess we've encountered the same issue regarding some companies, for instance, in Delaware and other destinations, that they open the company and then it needs more processing to open a bank account.
I think, like I said, today opening bank accounts have become more difficult when you compare to the last few years because of the extent of compliance that each bank is required to adopt. So each country has more or less, I would say, tailor-made its own banking laws, depending as to the extent of KYC they wish to have on the files for each client. Let's take the example of Mauritius. Opening a bank account in Mauritius is possible without you being physically present here. We do open bank accounts in Mauritius. Bank accounts are open for Mauritian entities, be it an offshore, a global business company, or a domestic company. Even foreign companies can have bank account open in Mauritius, and it will all depend as to whether the bank is comfortable on the identity of the UBOs of the entity, on the business activity and the volume of transaction and the amount of transaction that's going to happen. Each bank has got its own way of deciding whether or not they are going to onboard, and each country has got the same. So Mauritius is one option. Now, like I've explained earlier on, Dubai banks are relatively more, I would say, demanding when it comes to showing substance and requiring a certain amount of funds being kept at all times in your bank account. Or these are the requirements from a Dubai perspective for the banks. Moving on to Singapore, Singapore as well requires you to be physically present if you want to open a traditional bank account, but then you've got alternate banking solutions such as the digital banking or EMI. So each country is coming forward with alternate solutions today for anyone needing banking solutions. But it's not impossible. We have been opening bank accounts for clients for so many years now, and it's not something as if we are going to put it on a not to-do list. It's something that we assist, and we've been doing that for more than 13 years now.
Perfect. So Nagaty, do you have a specific question regarding, or a specific issue that you faced regarding opening the bank accounts that we can have this discussion as well with Taroonah, and I guess it will be useful as well for other people, like your own personal experience regarding opening bank accounts, especially for UAE now, since you're trying the market in
I'm
UAE.
still registering the company in the UAE. I still didn't finish. So after I finish, yes, I will ask for help to help me open the bank account. So expect a call 1 month from today.
Okay, that's perfect. And 1 month, this is taking a bit of time as well to open the company. It usually takes a little less if everything is in place.
It will be done before that.
Okay, perfect. So back to Taroonah, I believe Nagaty actually as well was asking a question regarding turning an offshore company to a mainland company. Is this possible in UAE?
Can you say that again, Mohab? To convert an offshore company
to a mainland company. If you have an offshore company and you want to turn it to a mainland company in order to move your business to UAE, is this possible?
I'm going to make a parallel here. It depends on the jurisdiction in which you are. You've asked it for UAE. Like I've said, there are 2 principal jurisdictions today in the UAE which offers offshore, pure offshore. There's the ICC and JAFSA. And those entities, they are set up under one particular corporate registry. Normally, depending on where you want to be relocated, let's say example of mainland company, most probably you will need to set up a new one. It's not an automatic conversion that can be done because it's a different category. The registries are different. It's not a conversion. You may consider redomiciliation, what we call it in terms of legal terms, but this will need to be confirmed by the registry depending from where you're coming, because especially being an offshore. This is for UAE, but the same thing if we compare it with Mauritius. Let's say what you have here in Mauritius is offshore companies being global business companies, and tomorrow you want to convert it into an onshore company. You would just surrender one license and automatically it will shift and being not being an offshore company and turn out to be an onshore company. So it really depends on different jurisdictions. And for specific questions, if someone has got that, just drop me a mail following the webinar and I will reply in more details depending on which registry you want the new company to be registered.
Yes, but like a very quick and not very precise answer. In UAE, is it possible to turn it from an offshore to an onshore?
Yes.
Okay.
We've certainly.
Okay. Like for specific details, this will need definitely it will need consultation. It will need one-to-one time to discuss it in details. But it is possible to do that. Yes.
You know, the legal terms, you know, the lawyers always like to put a lot of caveats and disclaimers. I was going to give you a long answer, but given that you just like cross-examine me, say yes or no. So
yes, exactly.
I'm saying yes, but definitely.
Lawyers are like economists, and give me an economist with one hand and give me a lawyer with one hand. It's always giving you a lot of things, and on this hand there's that, and there's this hand there's that, and you have a very long answer with a lot of terminologies, but just for let's say for the less the people who are not very familiar with the legal terms, I'm just getting the direct answer, and then the speaking the lawyer's language. I got what you're saying, but just to make it as well simpler for people who are attending. So I guess I will move back again to.
About the economic substance requirements, I understand that the UAE has a federal law that is applicable to like mainland, free zone, and offshore companies, and that has 2 main requirements. One is the compliance requirement for each, and one is like having adequate employees and premises in the UAE or in the zone. When you say adequate, it's a very vague term. For example, a startup that is going to have a holding company, and it's how many employees is it like based on revenue generating or based on what? Like how many employees should I have in the, and given the corona and the travel restrictions, is there do I have to have employment contracts and submit them? How does this because this is applicable across the board, and it's something that is tricky for any startup.
I guess it's a very interesting question, but if I may interrupt before Taroonah answers, and regarding the economic substance regulations, Nagaty, if you have any final comments or final points you would like to say before you leave, because I know you have another appointment, just to make very good use of your having you here.
Okay, one thing I want to say is that I think what we miss in Egypt is a proper advice on what to do on an offshore company, because a lot of people are just going after certain lawyers without naming names and just opening accounts, opening companies and accounts in certain countries, and they have no idea why they're choosing this country, why they're doing this. The exercise is never done right. So here I would ask Ibrahim, Shehata, I would ask you, I would ask JurisTax team, if possible, to create like a white paper with all the pros and cons for startups, an average of $1 million round, on what are the pros and cons of each jurisdiction, what are the pros and cons of each taxation law here and here and here, so that any startup that's looking to know the difference can check this white paper and know the difference, and then they can choose. And I think this is much needed, and this is why I chose to join this session, because this is a very big problem that all the startups are suffering. And I'm not a lawyer, I cannot give an opinion on something I don't understand. So I think combined, the people here on this call can do like a small white paper for the startups to check, and then if they need more things, they can choose a lawyer to ask. But the lawyers a lot of lawyers are misleading the startups into countries that they know well, and they might not be the best for them. And I really care about the startups and the young people who are starting things and putting all their money in it and all their credibility in it. And I really don't want anyone to get hurt from registering in a wrong place or doing something wrong. So this is a request I'm putting here, and looking forward to see this.
I always like to throw bombs, Nagaty.
No, he's right. We did something, but we rolled out the first episode. It's about Delaware, and like we did, like it's a very extensive report, and then like the pros and cons, like just at the end. And we're doing one on Netherlands and one on the ADGM, and we did.
Ibrahim, what I'm thinking of is something short, because the startup CEOs.
So we did this one like a type form, like it takes 1 minute. I give you like some indication.
I'll check it. Yeah.
But
check it out. I know
you're right. It's something that falls on our shoulders that we have to do.
Yeah, we owe this back to the startups. You know, like we are people who are a bit more experienced than others. There are some people who are more experienced than us, and you can make it open source. Like whoever has something new to add, they can add, and you can validate. Yeah.
We did a full guide of 100 pages about everything in the Egyptian ecosystem. Like when we launched Startright, this was the first thing that we did. And now we're focusing more on offshoring, given that we have a lot of scale-up clients. So that you don't have to be just in Egypt, you can explore offshore. So definitely you're right. We
comparison عارف اللي هو كيف تطير الطائرة يعني.
So for me, I will let you. I will get your opinion. So for me, it's 5 metrics to explore. It's capital gains tax, fees, bank account, economic substance requirements, and lastly the enforcement of rights. These are the 5 metrics that I would decide upon choosing between any jurisdiction and the other one.
That's perfect. I know that Shehata and Startright are doing a great job regarding different reports, and not just on this, and they are very up to date as well regarding the new regulations that are issued in Egypt, not just regarding the offshore structure. And I believe we will have to take as well the bomb that Nagaty threw at us, and JurisTax, since we're doing the offshore thing in Egypt as well, and to collaborate with Ibrahim on maybe more like an infographic. We can start it on social media as well, and we can try to share it on the different groups.
And put Egypt in it, like Egypt, those are the laws, those are pros and cons, UAE, Netherlands, US, Mauritius, whatever. and people will choose, and then if they need more information, they will reach out to JurisTax or to Ibrahim and ask them more information. Yeah.
We will do this initiative, and we will do this initiative, and we might call it Nagaty's initiative to educate entrepreneurs on how airplanes fly. And how to start a company.
Okay, I have to leave. Thank you, Mohab. Thank you, Ibrahim. Thank you, everyone.
Thank you for your time.
Thank you.
Now we'll move back. Yes, and now I will move back to Taroonah as well. First of all, to comment about this request of Nagaty and the bomb he threw at us, and then to discuss the question that Shehata asked about the economic substance. And please, very briefly, because we don't want as well to be very, we don't want to take a lot of time from people who are attending this.
So I believe for Nagaty initiative, like you've baptized it here, it will take much more time and brainstorming to be able to come forward, but it's not something which is unachievable. Anyone going offshore will ask himself or herself the same types of questions. Now, Ibrahim has listed them out. Are you going to pay capital gains tax? How much are you going to pay in terms of when you're receiving dividends? If you're making investment, in which country are you going to benefit from the DTAs? How many DTAs are we talking about? The cost, the setup cost, the recurring cost, the substance requirements. So all these are the same types of questions that are going to be asked. Now, when deciding which IFC you want to choose to set up, depends on the person business activity, the person capacity to pay the regulatory fees, to pay the professional fees, and also on the type of where he wants to do the business, where the countries involved, what other countries involved would be. All these will depend as to the choice of your IFC. So this is another exercise completely, but coming back to what Ibrahim asked me previously as to the economic substance requirements, given that it's relatively new today when you compare it with other legislation and regulations, we've been having a few discussions with the regulators in the UAE, and economic substance requirements is a self-declaration. It's you who choose which substance requirements and the way you wish to apply it. I know that's a very diplomatic answer and something very wide in terms of...
That's a very lawyer answer, Taroonah.
No, it's not. But we do advise, especially for holding companies, because you will see the list of relevant activities that were previously depicted. Many activities are financial services, so these are really very much substantive businesses which will not have a lot of difficulties to apply the economic substance regulations. But when it comes to be it offshore or free zone companies, for holding companies, let's say having a pure offshore company which acts as a holding, or a pure free zone company acting as a holding. Now, what would constitute as economic substance for a holding company? So these are the types of questions that we ourselves have asked the regulator, and they have been very candid saying that you need to try to come forward with suggestions, and it's a self-thought that it's made out of your own discretion to decide to what extent you consider it as adequate. So it's really depending on a case-to-case basis. Let's say tomorrow having a holding company means having one board meeting where you need just to, I would say, approve the investment that you've made of a certain amount. So having that board meeting being held in the UAE would tick the first box of having a whole board meeting there. So this is one of the type of thing. Now, certain free zone companies require you to have an office, even be it a flexi desk, or so these maybe another option for you to show that you're having a kind of substance in the UAE.
Like
even
a virtual office is possible?
Sorry?
A virtual office is possible? No, it has to be like...
No, you need flexi desk.
Yeah, flexi desk.
But like I've said, holding companies concept is very vague, and they even make a distinction. What constitute as holding companies? It should be companies that will earn only dividend income. Yeah. Let's say you have a company that will hold investment but is also doing consultancy. This would not even fall in the category of relevant business activities for ESR. So you need to be very specific. And like I've said, it will take us some more time to be able to give a very direct answer to a client. So yes, you do tick the box for ESOP because there is not a list there that you just say that, okay, I'm ticking this one because I have done that. It's really now that it's coming in place. And I believe in the next few years, it will be much more clear, especially in holding companies.
Perfect.
Yeah, another question, to get some advantage from some free legal services from the JurisTax. So another one, for the ADGM, it says like it has to be managed or controlled by a UAE or GCC resident. And they don't say like owned how many percentage, or controlling how many percentage of the shareholding of the company. And I've asked several lawyers in the UAE, would you give the same answer again, that it is not very clear? How many? So if I get like one share, 1%, that wouldn't fly possibly.
I didn't hear the question. Sorry, Ibrahim.
So my question is about. So the requirement for the ADGM, an additional requirement for the ECR, is to have the company have some management or ownership by a UAE or GCC resident, but they don't specify the percentage itself.
Yeah.
So do you think like there is a certain percentage, ballpark figure that you would go with? No, it's very difficult to assess now.
No. We could try with a few companies, and if a regulator come back to us and tell us, okay, it's not this percentage, we'll need to wait a bit. It's, the legislation is there, the framework is there, but the application, how is it going to be assessed by the regulators? We are not yet there. It's been the first year in 2021 where the reporting took place, the notification and the ESR took place. So let's wait a bit. I think it's too early to just be able in a position to give like a percentage of figures here as answers.
If I may I know that two lawyers are discussing some very specific parts,
very technical things. Yes, I'm sorry.
Very technical things. So let me go back to the basic things and the basic things for the only non-lawyer here now on the panels. If I may just summarize the main points as well that you discussed, and as well that was actually or the main question that anyone as an entrepreneur or as an investor is looking for, and that was the main question and the main participation from Nagaty was regarding the vesting, the ESOP, and the taxes, and a clean place. And that's how he phrased it, as speaking about the reputation, speaking about the blacklisted destinations, and speaking about some destinations that people are afraid to go to. Speaking about UAE, and that would be my final question to summarize and to end this webinar. Starting with Ibrahim and then to Taroonah, would you advise, for Ibrahim first, would you advise to go to UAE? You do offshore companies as well with your clients, startup clients. Would you advise UAE, and would UAE serve the purpose for that, regarding the vesting, regarding the ESOP, regarding the taxes, regarding the reputation, regarding other points that Nagaty might not mention as well?
For me, yeah, it's I think it satisfies that definitely, but Nagaty talked about him when he wearing two hats. So usually the hat that drives the offshoring decision is the investor hat, not the founder hat, because if the founder has enough credibility and the employees trust him, then they can do a contractual ESOP and then just do a general assembly or revise the shareholding structure every year to implement the vesting that happened, or the shares that have been transferred or owned to the employees.
And they do it on a local company.
Yes, so usually this is not the driving factor. Usually the one who drives the offshoring decision is the angel investor or the VC or the institutional investor. So it is the other things that we talked about, the capital gains tax, the exit rights, and the enforceability.
So from the other side, from the other hat of the investors, do you think that UAE mainly satisfies this purpose when it comes to the taxes, when it comes to the reputation, when it comes to taxation?
UAE is perfect, but the only thing that is not yet clear is just the ECR. That's the thing that we struggle with here in Egypt, because not everybody, but there's a bit of silver lining that a lot of Egyptians have UAE residency. So that that's sometimes
And it's not very hard actually to get the UAE residency.
Yeah, so that's maybe the silver lining there, but maybe and maybe the cost for having like a flexi desk or a couple of employees is not that big, but it is about like, you know, when they do the exercise, it's about like the thing is about startups, they don't pre-plan properly. They say like, I want it now, so they don't have the time to get the UAE residency and then do the offshoring properly. We want it now. We need the money now, or we're gonna die. That's the problem, you know.
Yeah, that's our Egyptian timing problem generally.
Yes, but I think it's across the board for any startup actually.
I've been trying to educate the guys at Mauritius and JurisTax actually about our Egyptian timing as well, because I'm the one working as well with on the side of the Egyptian clients, and they don't really get the different timing that we work at. But that's generally the culture, the business culture we're seeing in Egypt. And I know that if we started talking about that, and you as a lawyer, as a corporate lawyer, I guess this will be a very long discussion. Taroonah, the same question to you.
Remind me the question, Mohab.
What?
Remind me the question. So it's about how good UAE is for offshore structuring, right?
Regarding what Nagaty mentioned, the vesting part, the Esop part, the taxes part, the reputation part, the bank account, or might be adding the banking part, as well regarding the immigration part. Shehata mentioned the ECR, so regarding the immigration part, so does UAE satisfies all of that?
Okay, yeah, so my question, my opinion on that would be, there are very few IFCs today that can proudly say that there is 0% corporate tax or income tax, and is still be considered as whitelisted and is not grey-listed or by financial action task force, or is not blacklisted. There are very few of them. So in terms of that, already UAE does provide a platform which has got one of the lowest tax rates in the financial sphere. This we cannot debate. There is not much debate to be done there. In terms of ease of setting up in the UAE, especially, of course, there are different zones, there is mainland, but there are specific corporate registries in the UAE that can set up your business with 2 to 4 business days. You have your legal entity set up. And in terms of having such kind of flexibility, it's not given in all IFC. This would be another reason why I strongly believe the UAE is a serious competitor on the market for IFCs. And who needs to think more about when you're just talking about tax and the easiness of getting things done? The only thing which may be discouraging, it's not even the ESR, because I believe with time ESR would become more clear, because ESR is not something which is just new and applicable only in the United Arab Emirates. It's almost present in any jurisdiction which is trying to promote itself as an IFC. You need to ensure that there is a kind of substance requirements. I still believe the thing that UAE can be more challenging is the bank account opening in the UAE, and this is not something new. We all know how difficult it can get in certain situations, especially for pure offshore companies. But I can tell you that there are a lot of new alternative options for banking if you really wish your bank account in the UAE. But it each depends as to what business activity you are doing for us to be able to dwell in more details and provide specific banking solution. But one of the easiest way, like you've mentioned yourself, Mohab, is to have your entity in Dubai and just open the bank account in another country, which will be less time consuming and doesn't require you to be physically present.
And out of my experience with you, we usually go to Mauritius, for instance, so for the bank account.
Yeah,
and then
Mauritius is a good option as well there.
Exactly. All right. I guess that's all. We don't want to be taking a lot of time for the people who are attending and the people who are watching us live and everywhere. I guess we will have to take the bomb that Nagaty threw at us, and I guess we might collaborate on something from our three sides to create some sort of maybe more of a social media campaign. We use the definitely after the approval of Shehata, we use some of the content already Shehata is creating and some of the very useful reports that Shehata already produced, and we might add our perspective as well from JurisTax side. And we do more marketing for it as well, and maybe more collaboration to spread the word about offshore structuring, because it's still a very strange thing for entrepreneurs and startups. They don't really get it and they don't really understand it very properly, as much as they understand doing a company in Egypt, in a manner of speaking. It's they are more educated about that. Or I see at least a lot of initiatives in the Egyptian market educating them about that. Ones of which Ibrahim Shehata is leading. So I guess I would be thanking everyone. Thank you for your time and thank you for joining us. And thanking for the very, 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 very beneficial webinar that I've been personally waiting for a long time. And I guess we will take it from there and do other things to educate people more about offshore. I would be thanking the one who already left, Nagaty, for joining us and his time and for giving us his business insights in Amharic speaking. I'll be joining definitely Ibrahim Shehata, my dear friend from Egypt, and the very nice lawyer and the very nice on a personal level and on a professional level. He's trying to do a lot of and dedicate a lot of time and a lot of effort actually in educating the market and sharing insights and sharing information through his website, through the posts that he issues, through his time that he dedicates for different initiatives and different webinars and meetings like this. I would be sharing thanking definitely Taroonah for your time and your insights on UAE, and you're trying to simplifying and not using the lawyer voice a lot and simplifying the things for us regarding the UAE and the offshore structure in generally. So thank you everyone, and it was very beneficial, and I think we will meet again definitely, and we will continue this collaboration on all levels, inshallah. Thank you.
Thank you, Ibrahim. Thank you, everyone.
Thanks.
Thank you so
Thanks
much.
a lot.
So much.
Thank you. Bye-bye.
Bye-bye.